US indices prices ended higher last week after a pullback on higher-than-expected headline inflation data. However, core inflation in the United States came in lower month-on-month, keeping dovish expectations in 2024 on track. Weaker-than-expected PPI in the United States was yet another indicator of the declining inflation trend. Commodities rallied in the latter half of the week as geopolitical risks continue to dial up global uncertainty, both politically and economically. The Middle Eastern region has witnessed somewhat an expansion of the war in recent days, as the United States and the United Kingdom conducted joint strike operations on Yemen, widening the scope of the ongoing conflict in the region. Furthermore, with recent elections in Taiwan seeing a pro-independence party and the Chinese government adamant that China and Taiwan will be reunified, there could be friction building in the region. The United States has previously said that it could get involved should China decide to take the island by force. The price of indices continues to expect interest rate cuts, and with earnings season now in full swing in the United States, volatility could be strong moving forward. Lockheed Martin shares hit their highest levels in 6 months, as the stock price closed last Friday's session at around $462 a share. The weapons manufacturer has seen a strong rebound in share prices since the conflict in Israel began, and is now experiencing more price appreciation as the conflict in the Middle East looks likely to expand. With the United States military increasing operations, Lockheed Martin could see some new contracts in the future, with the US last year approving its largest-ever defense budget of $886 billion. Meta shares are approaching their all-time highs, as the company closed out last week at around $371 a share. The company's share price continues to rise as market sentiment continues to remain positive, with the company itself expected to report earnings on February 2, 2024. The company has seen its highest number of daily active users, with over 3 billion people now using at least one of Meta's applications every single day. The company has also seen an improvement in efficiency as it integrates artificial intelligence into its digital marketing segment. Finally, with the United States in an election year, online advertising is set to rise this year, with some analysts suggesting around $10 billion could be spent on campaign advertising. This could see Meta's revenue increase, with analysts suggesting the company could make over $1.2 billion on that back of that spending. Crude oil prices still remain under pressure despite strong fundamentals in the current market environment. Escalations in the Middle East, OPEC Plus production cuts having started as of January 1, 2024, and robust demand expectations from all of the major energy agencies could still see a strong year for oil prices. The average price target consensus, according to Bloomberg, is around $87 a barrel in 2024. With ongoing geopolitical turbulence, oil prices could remain volatile. Gold prices ended the previous week with a late rally after news that the United States and the United Kingdom conducted a joint airstrike on Yemeni targets. The market saw the move as further escalation, with the likelihood of a wider regional war increasing by the day. With markets still expecting a dovish Federal Reserve approach to interest rates in 2024, US dollar weakness could contribute to gold price movement. Palladium prices have been volatile as Chinese economic data was published. While the report did show an increase in GDP and industrial production, the GDP data was slightly lower than expected. While palladium prices moved lower, stronger GDP and industrial production data was stronger, and this could signal stronger demand, which can cause further volatility in palladium. The Euro-USD pair continues to remain volatile as different ECB members issued different interest rate path expectations. Initially, ECB member Holtzman indicated a more aggressive policy before ECB Chair Lagarde suggests rate cuts as soon as this summer. Despite Eurozone uncertainty, markets still widely expect the Federal Reserve to go ahead with their rate-cutting plans in 2024, which could impact the US dollar.